Hello, good morning, and welcome to this morning's live Forex trading session. As usually, this weekly session is a chance or an opportunity for everyone to ask questions or iron out any issues they have regarding trading, their platform, strategies, and all that. So, as usual, we'll first go through the market, see what opportunities are available, and then afterwards, we'll go through the questions and answers. Okay, so to kick off, as usual, we'll start off with the economic calendar to give us an idea what's in store for us today in the markets. So today is Tuesday, the 27th of July. Tuesday, the 27th of July. And again, make sure you set your economic calendar time zone to your own time zone, wherever you're based. Mine is set to GMT +2, as you can see. So all the times I'll be quoting will be GMT +2 times. But obviously, you go with the time on your own economic calendar according to your own time zone. So the main markets we're looking at are the Euro-US dollar and the dollar-Canadian dollar. So we're looking for reports of high importance that could affect these currency pairs. So let's have a look. So you can always just ignore reports of low importance. It's also good to note reports of medium importance that could affect the market you're trading. But of course, we're not trading any currency paired with the yen. Obviously, if you were trading currencies paired with the yen, you would note that because that's the Bank of Japan governor speaking, which could affect currencies paired with the yen, but we're not trading any of the currencies paired with the yen. We're trading the Euro-US dollar and the dollar-Canadian dollar. So again, you can just ignore reports of low importance. Like I say, you note reports of medium importance, but we don't, unfortunately, we're not concerned with France. And the main, when it comes to the Europe area or the Eurozone, the main powerhouse and the main one we worry about is Germany, because Germany is obviously the main powerhouse in the European Union. So it's reports out of Germany that we worry about in relation to the euro. But the other European countries, we don't worry. So we could just ignore France. Sorry, France. And then we can ignore reports of low importance. We're not trading anything to do with Mexico. We can ignore reports of low importance. And then we can see at 2:30, we have the durable goods orders out of the United States. That's a report of high importance. And reports of high importance due out of the United States affects all markets. So all markets are affected by reports of high importance due out of the United States. So when I say all markets, I mean the fixed income securities market, that's in bonds, treasury bills, the global stock market, all currency pairs, commodities market, all markets are affected by reports of high importance due out of the United States. So in that light, this report will obviously affect the currencies we're trading, Euro-US dollar, the dollar-Canadian dollar, and all other currency pairs will be affected. So I'm going to avoid trading both the Euro-US dollar and the dollar-Canadian dollar prior to this report at 2:30, the US durable goods orders. And then you can see also at 3 o'clock, we have this house price index report of medium importance, to note that, because any report to do with the housing market or the real estate industry could potentially affect the markets. So you note that. That won't stop you trading, but it's good to note that. And then at 4 p.m., we have the CB consumer confidence report at 4. And the rest are just reports of low importance. So the last report today, it's the report at 4 p.m., the CB Consumer Confidence Report at 4 p.m. So ideally, you do not want to trade prior to the last report of high importance. And that's the ideal scenario, but you take each day and each situation on their own merit. So ideally, you do not want to trade prior to the last report of high importance. So ideally today, you'll just avoid the market prior to 4 p.m. GMT plus 2 before you trade. But today, we have 2 reports of high importance. So you need to weigh the pros and cons, which is of more significance. Of course, this comes with time and experience. But also this is, if you're new to trading, that's why it's important to read what these reports are about, number one. So you can either click the drop-down menu, find out what these reports are about, and you can also Google what the report is about. That's number one. So you want to find out what do this report mean. Like I said, there's nothing here, so you can just Google what CB Consumer Confidence stands for. And then most importantly, this is where the experience comes in. With time, you need to see how the market reacts to these reports. And, you know, again, just from experience, I know the durable goods orders have more of an impact on the markets than the CB Consumer Confidence report. So for today, because this report is of higher significance than the last report, we'll avoid trading prior to this report at 2:30. And then at 2:30, I'll have my first attempt at the market because this report is of greater significance than the one at 4. So I'll have my first attempt. I won't wait till 4. I will have my first attempt around 2:30. But if I lose out on that, and I'll stop trading and then have my second attempt at 4. So that's the ideal pattern for today. But again, let's look at the rest of the week, because what's happening or what's coming up later on the week could also determine whether I do have 2 attempts at the market or even 3 today or just 1, depending on what's coming up later on the week. So let's look at the next 7 days. So tomorrow, Wednesday, the 28th of July, let's see what's coming up. We've got the Australian inflation there. But the big one we have coming out tomorrow, it's number 1, the Canadian inflation rate, but that's not what's the big one. The big one is the US Federal Reserve interest rate decision. So the US interest rate decision is due out tomorrow evening. And like I said earlier, reports of high importance due out from the United States affects all markets, you know, fixed income, stock markets, global stock markets, all currency pairs, commodities markets, they are all affected by reports of high importance due out of the United States. And there's no report higher or more importance than interest rate decision. So that's a report of huge, mega importance, the US interest rate decision that will be announced tomorrow evening. And of course, that will be a highly anticipated report. And there's a high probability of the markets just trending sideways leading up to this report tomorrow evening. What I mean by that is that, you know, everyone knows the report is coming out on Wednesday evening. Everyone will be holding their positions. There'll be uncertainty in the markets. So, you know, Monday, yesterday, today, Tuesday, and tomorrow leading up to the report tomorrow evening, GMT plus 2 time, there's a high probability the market will just be trending sideways due to the uncertainty leading up to the interest rate decision tomorrow evening. So in view of that, you want to be extremely cautious trading leading up to this report for the whole week. So if you traded yesterday, ideally you want to have just 1 attempt, maximum just 1 attempt, and then that applies to today too. So today too, I'm just going to have a maximum of 1 attempt at the market. And then if that's tomorrow leading up to the report, I'm not going to trade at all. So again, this is why it's good to check the rest of the week, because basically what you're trying to do is that when you're trying to make trading decisions, you want to put everything in context. What is happening today? What's happening at the rest of the week? How does that influence your decision making on that day before you then decide what you're going to do? So you can now see this US interest rate decision coming out tomorrow is going to influence how I trade today. So let's look at the rest of the week. So that's tomorrow, Wednesday, and Thursday, the 29th. We have the Germany unemployment rate, Germany inflation rate, and then that's another big one coming out on Thursday, the GDP growth rate from the US. And Friday, the 30th, you have the Germany GDP growth rate and the Euro area GDP growth rate. So you've got some big reports coming out this week, but the biggest one is the US interest rate decision tomorrow evening. So going back to today, so in light of the US interest rate coming out tomorrow, I will just avoid trading the markets prior to 2:30. Then at 2:30, I'll have placed my trades, have only one attempt at the market around this time of 2:30. And that will be all I'll have. So if I lose out on that trade around that time, that's it. That's the end of trading for the day. Obviously, if it's successful, fine. But if I lose out, that's it. I'll stop trading. I'll just have one attempt today in view of the report coming out tomorrow. Okay, so now, again, you can now see this is why the economic calendar is very important place to start as a trader, because you can see how it has influenced my decision making for the day. So obviously don't forget Market Watch or any other website that give you up-to-date financial news to see if there's anything that could create uncertainty in the markets. And again, that's why I like trading currencies, because when it comes to trading currencies, it tends to be the major news that could affect currencies. Now, the commodities market and the stock market, they're very sensitive to all sorts of news. So those markets tend to be jumping up and down, and you need to be glued to the news. But with the currency market, it tends to be major global news that tends to affect currency markets. And at the moment, there's nothing really big going on that to create uncertainty. I mean, you can see here, North and South Korea restore communication channels, agree to improve ties. That's good news. That's not going to create uncertainty. That's good news. Also, China in talks with the United States. So they're just all going on, but nothing that is causing anxiety or worry or uncertainty in the markets. So that's a good thing. And of course, there are no public holidays today in the United States or in the UK. So we can go ahead and trade. But say when I say go ahead and trade, like I said, we're not going to place any orders prior to the report at 2:30 GMT +2. But we can have a look at the charts and see what the chart has in store for us. Now, also, before I just bring up the charts, when you're looking at the markets or deciding what you want to trade or how you want to trade, also the good thing is also never to forget money management. That's always a key thing. How much you should be risking per pip and all that. So don't ever forget money management. So let's look at the charts. Let's start with the Euro-US dollar. We'll start with the daily time frame from a swing trading point of view. So looking at the Euro-US dollar at the moment, we can see this is the daily time frame. Market is currently trending down. So look at the moving average for today. It's 1.1941. So the moving average 50 today is 1.1941. So I'm just going to adjust my pending buy order, because if the market reverses and goes up and breaks the moving average, I want to buy 2 pips above that. So I'm just going to adjust my pending buy order to 2 pips above the moving average for today. So that means my pending order will be 1.1943, 2 pips above the moving average. So I'm just going to adjust it to 1.1943. And my stop loss is 100 pips, 1843. So that's it done for my swing trade. Again, that's just a pending order, and I'll just keep adjusting that every day with the moving average till the market takes my order. So go to day trades, 5-minute time frame. At the moment, let me just delete those previous sideways trend lines. Actually, before I delete it, so we can see that yesterday too, the market was trending sideways, which wasn't surprising in view of the reports coming out on Wednesday. So it was just trending sideways yesterday. You can see it broke the sideways trend there, went up, but again, it's now trending sideways again. It's really not going anywhere. So you can now see this is a new high point, and that's the new low point. So I'll just adjust these lines. The high there is 1.1817, 1817. And the low there is 1798. 1798. Okay, so that's the new sideways trend. Again, I'm not going to place any orders now, but we can see the market is currently trending sideways between these two white lines. R1 is outside the sideways trend. The pivot point is outside the sideways trend. Those are potential entry points come 2:30, but I'll reassess the market just before the report at 2:30 and decide then where to place my pending orders. But I'm just going to leave it alone for now. Let's come to the dollar Canadian dollar. Again, we'll start with a daily time frame swing trade. Looking at the moving average 100 today. The MA is the moving average 100 is 1.2335. So this time I want to sell 2 pips below that. That'll be 1.2333. So I'll adjust that to 1.2333. 2 pips below the moving average 100. 100 pips stop loss. So that's it for the swing trade for dollar Canadian dollar. And then for day trade, go to the 5-minute time frame. Again, you can see the market has just been going nowhere. It's just all up and down since yesterday and even today. So again, that's not surprising in view of the report coming out tomorrow, the US interest rates. So that's why you have to be extremely cautious. Some people just, keep out of the market entirely. We just not bother trading at all and just wait till Wednesday. So if you're a very conservative trader, which is best, it's a good thing to be extremely conservative as a trader. You can just completely avoid the markets entirely and wait till Wednesday evening before you trade. But I like taking risks, but even when I take risks, I'm still conservative. Like I said, I'm just going to have a maximum of 1 live attempt. And even that attempt, I need to really make sure I'm, keeping out of a potential sideways trend. So looking at the euro and the dollar Canadian dollar, for example, I'm going to be extremely conservative. So you can see since the 22nd of July, and the 22nd of July, that was last week, Thursday. So even going back as last week, Thursday, 22nd of July, you can see the market hasn't really been going anywhere. So I'm actually going to take all this as a sideways trend. So this will be the lowest point. That will be the highest point because, again, like I said, I want to be extremely conservative and make sure I don't get caught up within a sideways trend leading up to this interest rate decision tomorrow. So the high there, let's see, is 2606. I would round it up to 07. So that's high. And the low point there will be 2527. So I'm going to take like I said, I'm going to take all of this as a sideways trend, so I don't get into any trouble leading up to, because like I said, there's a high probability of the market is just going sideways leading up till the US interest rate decision tomorrow. So I'm taking all this as a sideways trend, keep out of trouble here, and you can see R1 and the pivot point are within the sideways trend. R2 is outside the sideways trend, so you can use that to trade. S1 is outside the sideways trend, so that's the potential only entry point to have come 2:30. But again, I'll reassess the market then and decide where to trade. Okay, so that's it for my plan for today. Any questions?